Let's go across to Sandip Sabharwal of Prabhudas Lilladher. He joins us now. Sandip, afternoon. Thanks for joining us. The Nifty has struggled at levels around this 50, closer to 5,900. Where do you see the markets now? And with this inflation figure coming out, how would you read RBI's action now in January?
Good afternoon. I think significant developments have happened over the last few days, and I think one important event happened with the NMDC disinvestment, where the disinvestment went off very well, and the stock price has held on after that and appreciated. And most of the stock got taken out not by PSUs but by private investors. So that was one positive signal for the markets. The second positive signal, I think, has been the action from the government, where I think some action seems to be happening on the legislative side also. And the government has announced this, the setting up of a watered down investment board. But I think today's inflation data, I think, is very, very critical. And I think for the first time over the last 3-4 years, RBI will actually undershoot on its expectations for March inflation, where they had upgraded it to about 7% a few weeks back. I think clearly, I think by March we should more like 6.5% rather than 7%. So I think the market needs monetary support at this stage, and although most of the economists are finding it difficult to change their view so fast, and they are saying that the cut will come only in January. But the whole point is that if it's imminent that there's going to be a cut 6 weeks from now, and the economy actually is in doldrums, why not cut now? So I think that's a dilemma I think RBI will face, and my guess is that they could go either ways. I wouldn't say that they can't cut. Possible they might.
Yeah, I agree with you. In fact, I would be in the pro-rate cut camp myself, Sandeep. Not that the RBI would listen to us so much, but that's separate. I'm a little surprised with the way the market has behaved. Well, now it is behaving more positively. It's 84 up on the Sensex, and that's 0.5%, almost 0.5% on the Nifty as well. The mid-caps have climbed to a 0.6%. They were in flat and near red terrain before the inflation numbers. So there is a spring in the step in the markets now. But why is this 5,900 or 5,940 proving to be so formidable? You have to admit we've had a bunch of good news. The IIP number was so much better than expected. There is a little brighter chance that the banking bill will get passed. And yesterday's even watered down, as you call it, were still positive announcements of a government that's willing to act compared to what it was some months back. And now the inflation. Do you think, I mean, first of all, why is it struggling at 5,940? Is it largely positions being squared off because of F&O positions at the 5,900 strike?
So I think one reason is obviously people were waiting for the WPI data which has come out, which is getting absorbed. I think the second big factor, Lata, you have to see is that a lot of issues have come up suddenly in terms of IPOs, follow-up issues. And they are taking up a lot of money in the system. If you see NMDC plus this Bharti Infratel and some of the smaller ones, around 12,000 crores of money, which has actually got invested into the equities, but not in the secondary market. So that will obviously have a short-term impact. But I think as a trend, and I think the trend clearly seems to be more stronger now and on the upward side. And plus the composition of the index also, because you see ITC has the highest weightage at 12-13% of the Nifty now, and because of some technical reasons ITC is fallen some 5-6%, so that itself leads to a 0.6-0.7 fall in the index. So I think these are the factors, but I think clearly I think PSU banks will seem to be very well placed for next year, and I think they could inter-rally. Although I am not a big investor into PSU banks myself, but I think as things are panning out and the pace of reduction in inflation as I see it going forward, we could actually see better action coming in on the PSU banking space.
What about on the auto side? Because if people are banking on the recovery on the economy, along with banks, even autos could have a fairly good, fairly good chance of doing quite well. How are you placed on the auto stocks, and in particular, which ones would you like?
I think auto stocks are well positioned, but there are different stories for different companies. I think the commercial vehicle space still continues to be stressed, and I don't see growth coming back into that space in the near term. I think we are holding Mahindra and Mahindra in our portfolio, and I think that's one of the better stocks because volume growth continues. It's got a successful track record of product innovation and successes. And the tractor volumes, which had actually slowed down, have now started to come back. and we could actually see margin expansions coming through in this company. So I think that this is one stock which we like. In the two-wheeler space, we are clearly seeing a preference for Bajaj Auto now, because it's people's belief that Bajaj Auto will, one, take away market share from the other companies, and secondly, they could also benefit because of the export story. So I think that's another stock which we don't hold, but that's another stock which could actually do well.
Actually, you spoke about banks. Just pull up the bank Nifty. It's a vertical rise after the inflation number. I mean, it's. I think it was in flat terrain. It is now up 1.13% for the bank Nifty. Look at the cliff-like rise that you are seeing at about 11:30 when the numbers came in, and the index also is now scored a ton. The Sensex 102 up, 103 up, and in step with the Sensex's rise is the movement in the Nifty Junior as well. So the momentum stocks are also going, but clearly leading the pack is the banking set. So that's the next question to you. Which PSU banks are you backing, Sandip?
I think in terms of the rally, I think the rally always tends to get led by SBI, and we've seen some sort of rally come through in that bank already. So I think among the leading banks, SBI, Union Bank, Bank of Baroda, I think all of them should do well. And we hold Bank of Baroda in our portfolios, we don't hold the other two. But I think the entire set will do well. Even the smaller ones will start doing well, although I find it very difficult to track the smaller banks. I think the entire set will do well. So it's not, so I think for someone who wants to play this bet, I think some PSU banking index or PSU banking fund I think could be a good play on the entire space.
Sandeep, how are you placed on the mid caps, and would you like any of them and recommend any?
On mid caps, I've been positive on the aviation space, X of Kingfisher, and I think that space continues to do very well. And I think the bigger story there is not really the FDI, but the direct import of ATF and maybe sales tax cuts on ATF, which will boost profitability. Consolidation has already had an impact. I think this space I still continue to like despite the kind of appreciation we've seen, and should do well, and we hold both SpiceJet and Jet Airways in our portfolios. The other story obviously is media and the digitization beneficiaries. So I think that set should still continue to do well.
Okay, well, final question to you, Sandeep. Given the bunch of better macroeconomic data, I wouldn't say gung-ho, but so much better than what we have been used to, where do you see the index? March 31, or even for that matter, Jan 31?
See, by March 31, my guess is that we could see a new high. And overall for 2013, we could see a 15% plus kind of return from the broader indices. I think 2013 will be a better year for the wider market, the broader market, rather than the pure index.
Fair enough. On that optimistic note, thank you very much for joining us.